Hello everyone, and welcome to the Financial Profit. In today's profit report, we will discuss two extraordinary futuristic defense companies with enormous potential in the drone and unmanned aerial vehicle space: Kratos Defense and Redcat Holdings. If there's anything that the war in Ukraine has taught us, it's that the future of war may be in drone technologies. The feuding nations continuously trade massive drone attacks, illustrating the evolving nature of modern conflict. In fact, Ukraine's drone production has surged by approximately tenfold year over year to over 200,000 per month recently. This dynamic highlights just how crucial drone warfare may be in future altercations. After all, why shouldn't it be? With drones, you get continuous surveillance, surgical strike capabilities, limited human life exposure, and other extraordinary benefits. In addition, the newer and smaller drone technologies are inexpensive relative to bigger, earlier drones, ballistic missiles, and other more costly war technologies. Therefore, it's not surprising that the Pentagon recently announced a production ramp-up in drone tech. The U.S. has the most advanced military-industrial complex globally, and it makes sense for the U.S. to be the undisputed global leader in drones as well. Now, I like several high-quality drone companies, and one stock that I purchased recently in early July is Kratos Defense. Now, Kratos has performed exceptionally well since then, appreciating by approximately 35% in only about 5 weeks. Another stock that I'm keen on here is Redcat Holdings, which I recently initiated a long-term position in. First, I think that we should put things into perspective. Kratos stock has surged by over 200% just in the last 12 months alone. Kratos is considerably overbought technically. Now, while the stock began a constructive correction recently, it could potentially move lower in the near term. Nonetheless, I believe it remains a very solid intermediate and long-term buying opportunity because of its incredible potential going forward. Kratos is a very well-diversified modern defense contractor, implementing some of the highest-end technologies in the defense space, national security, and commercial markets in the United States and globally. Moreover, Kratos operates in products that include high-end unmanned vehicles, including the XQ-58A Valkyrie, 5GAT, and other highly advanced vehicles. Kratos also operates in software and systems, potentially offering higher margin segments for investors in future years. And I just want to highlight how important it is for the company to be involved in the software space and to have services and systems revenues, because this provides the potential for an ecosystem for Kratos to implement in the future that could be highly profitable, and this could enable the stock to move much higher as we advance. Now, Kratos likely has much more growth ahead, earnings-wise and sales-wise growth as well. Kratos has been very consistent in beating the consensus EPS estimates. In fact, Kratos has only missed EPS estimates one time in the last 5 years. Moreover, analysts anticipate Kratos to increase EPS substantially in the future, and the company likely will not disappoint. So, EPS are likely to surge. The expectation is for earnings per share of about 75 cents next year. Nonetheless, given the explosive nature of the company and the booming demand for high-end drone technologies, we could see outperformance relative to earnings. Therefore, I believe Kratos can report around the higher end of the analyst estimate range, potentially earning about $1 in earnings per share next year or more. Additionally, we could see higher than anticipated growth next year. Kratos could earn about $1.50 in earnings per share in 2027. Still, this dynamic puts Kratos' valuation at approximately 70 times next year's EPS and roughly 45 times 2027 EPS projections. Now, of course, in a more bullish case scenario, Kratos could potentially earn more, Nonetheless, given this current dynamic, Kratos may put up a very impressive 40 to 50% earnings per share growth rate over the next 3 years or so. This implies that Kratos could be trading at about a PEG ratio of 1.4 here, which is still relatively inexpensive for a high-growth company like Kratos. Also, Kratos could report better than anticipated results. Therefore, its PEG ratio could be even lower here. Now, let's talk about Redcat for a little bit. Redcat's price action has not been quite as explosive recently, as the stock declined after the initial run-up after the Pentagon's announcement. Still, Redcat's advance over the last year has been phenomenal, with the stock essentially quadrupling from its $2.50 low last October. Now, while the stock is volatile, the uptrend appears stable, and we could continue seeing constructive price action as we advance. Now, Redcat is more of a traditional drone company, but it offers some of the industry's most advanced and impressive drones that I have ever seen. The company also offers software, research, and other solutions that could make this stock a very high commodity, could also make it a takeover target, which, it could be acquired by one of the big defense names like Northrop, General Dynamics, Lockheed Martin, L3Harris, all of these major, Raytheon, all of these major defense companies are constantly looking for growth opportunities, and what better place to look for those growth opportunities than in drone technologies, which makes Redcat a prime takeover target. So let's talk about the excellent growth prospects that Redcat has. Unlike Kratos, Redcat is not yet profitable. However, Redcat has enormous growth potential ahead. The company's sales are set to surge this year and could more than double next year as well. It appears that Redcat can continue expanding its sales for many, many years moving forward as it aims to establish itself as a top player in the drone space. The bottom line, Redcat and Kratos are two excellent stocks in my view, but unfortunately, there can only be one winner here. While I like both companies very, very much, I have to give the first place prize to Kratos. Kratos is the winner here primarily due to its more established place in the industry. Kratos is already quite profitable, and its earnings per share growth could take off considerably in future years. Unfortunately, while Redcat has solid growth potential, it is not yet near substantial profitability. This dynamic opens the company up to increased risks due to the potential future capital raises and other factors and uncertainties associated with a company not yet nearing its profitability stage. Having said that, I have quite high expectations for both companies' stocks. Therefore, my 1-year price target for Kratos is $120, and my 1-year price target for Redcat is approximately $15, which suggests that both of these stocks may increase by roughly 100% in value over the next 12-month time frame. Thank you very much for watching my profit report. I truly hope that you enjoyed it. And more importantly, I hope that the knowledge you gain here helps you make more informed investment decisions in the future. I would also greatly appreciate hearing your comments, so please join the conversation in the comments section below. If you enjoyed my video, please click like, share, and subscribe to my channel so I can continue to create these highly informative and potentially very profitable videos for you. You can also join the Financial Profit, my exclusive investment community, which is Seeking Alpha's #1 service for proven portfolio profits. So don't hesitate to join our incredible investment community now. Thank you very much for watching. See you next time and have an amazing day.